Welcome, guys, to another video. We had Tesla report earnings this afternoon. So expectations were about 0.99 to 1.01. If we go over to the whisper numbers, 1.01 is consensus, but the whisper number, the number traders were expecting or Wall Street investors, was 109. 105 is what came in, so it's a little worse than expected. And if you look at how Tesla's trading in after hours, I think it's down 4%, something like that. Let me see, 4.8%. I have crypto and I have the S&P 500 futures. Are they open yet? Yeah, they are open. So it looks like at first there was a little bit of a rise in Tesla, but then we sold off, and they beat the consensus number, but they did say that I just finished the call. They did say that they are expecting a slowdown. There is deflationary pressures. They're seeing the signs of softening worldwide, but they still expect to have good numbers. So for the rest of the video, what I wanted to do is jump over to Seeking Alpha, and I'm still taking advantage of their trial. Man, I really love Seeking Alpha. If you don't have it, you really got to consider getting their premium numbers, because you get to look, like I have Tesla, you get to look at what the analysts have expected for earnings, and you get, this looks like 9 years of data, which is insane. Quite useful. Now it does change. If I look at the revisions, you can see how over time it can go. On this one, it happens to be getting better and better, which, hey, that's pretty good. If we look at each line, this is the revisions over time. So 2027, they give you a guidance number. It's not guidance, it's an expectation, but it's whatever it is. And then 2026, 2025. So you can see how the analysts are justifying the price, because you get to see more or less what analysts expect to happen over time. And you as an investor get to decide what price is fair for this value. So this year there's 94% growth. Next year it slows down to 32% growth, then 21% growth. Something interesting is expected to happen in 2031. Okay. Let's jump over to the previous slide. So right now, Tesla costs you $222. This is after all the splits. The high is 400. And what are you getting for that price? Okay, that's the question. So we know it's a growing company. We know it's a high profit margin, relatively speaking, for an auto manufacturer. But are these fair prices? If it's going to grow year over year, is 50 PE this year, 37 PE, is that a fair price? How would you know? And that's the debate. That's always a good question. I am constantly trying to improve my valuation methods. I am a big fan of the PEG ratio. Let me jump over here, earnings. So if Tesla were only to earn these $4.40 year after year, this company would be extremely overpriced, because it's a 50 PE for a non-grower is ridiculous. Maybe a 15 PE would be fair. And then this would be like might be a $60 stock, something like that. 10, yeah, it might be a $60 stock, but it's 222, and we know that it's not a non-grower, it's a grower. Okay. So let's say 2030, analysts expect growth of $12, but it's going to slow down 10, 12% by then. The S&P on average is 15 PE. So what do we pay for that? So 120 plus 60, that's around 180 for a 15 multiple. That's if it were compared to the S&P. Maybe a 20 multiple might be more fair. It's hard to say, right? So let's do a 20 multiple times 12.60. That's $252. Because it's going to slow down, you might have to take that into consideration. Maybe right now it's not the best time to buy it. Maybe you do because it's growing. That's really a personal question. You have to decide um, how much risk to reward you're looking to take per trade, so per investment. So here's $21. Let's say that will happen. We'll multiply that by 20 PE. Then this company is worth over $400 in 2031, right? So these are varying. If we go into recession, these might get a haircut. If rates keep going higher, they might get a haircut. Um, if the price goes down, it might look more attractive because these may fluctuate, but they may pan out. And if Tesla goes to $100 and maybe it goes to $400 in the future, that's a different risk reward, isn't it? So this is like a comparative model, a comp model. Um, this is also a good way to do it. Price to sales. If price to sales is 8 right now, what's a fair price to sales in the future? You can argue that maybe 8. 8 is kind of for like a grower. Maybe 4 is more fair. If you buy it now, maybe it quadruples in 10 years. Really depends on what metric you're using for growth. Is there anything else that I want to point out? Um, I don't think there was anything interesting in the call. Oh, yeah, actually, there is. So, Elon Musk in the beginning did have commentary on the call, and he's quite a salesman. He was trying to he's always telling a story, but he kept talking about Apple, and let me see if I have it on the other one. He kept talking about Apple and Saudi Aramco, and he was saying that he strongly believes that these are the two largest companies on the planet right now, Apple and Saudi Aramco. Tesla's down here. So if you combine Apple and Saudi Aramco, you're looking at over $4 trillion. Elon Musk was saying that Tesla currently 700 billion. He could see Tesla being worth more than either 2 times Saudi Aramco or Apple and Saudi Aramco combined, which would be a 4 trillion valuation. And I did the math. If that were to happen, which he didn't give any evidence for that, but let's say it did happen, that's about 5.8 to 6x the current valuation, and about a $1,300 price, which is interesting. He didn't give a time. He didn't say, "Oh, in 10 years or 20 years." He just threw it out there. But from what the guidance, the analyst expectations right now, I don't really see it. The multiple, at least in the next 10 years, from this data would have to change, or it would take another 10 years later after that. I think the highest price I could see would be something around $400 off this 2031 number. And if he's talking about 1300, we're looking at another decade after 2031. So yeah, yeah, maybe in the future, like the far future. But I thought that was interesting. Let's jump back. Let me look at the chart. Um, let me see if I can blow it up here. Here's the monthly chart of Tesla. If we do get some kind of a slowdown, maybe there's a buying opportunity. Who knows where? But to me, there's four stages in the market. There's the rising, the sideways distribution, the falling, and then there's the accumulation. I think I think we're in a distribution. The Fed is working really hard to cause this recession, just to put a lid on inflation. I think we see some pullback. Let me see. Do I have any valuation metrics? No, I don't. But you see it in a lot of stocks. A lot of these companies are 50 times cash flow or 25 times cash flow, and with discount rates going higher, I just it would make a lot of sense for this market to pull back and give a buying opportunity in a lot of names. Let me open this one up. Do the monthly. So if I look at price to sales, this is Tesla. I have financial metrics. I love these. Price to sales, it was very expensive. It's since grown into that multiple. Maybe we pull back some more. 10 price to sales is quite high. Maybe we're a little ahead of ourselves. Let's look at PE 80, earnings yield, maybe price to book, 20 times book. At one point was 6 times book. And let's compare it to Apple real quick. Apple's in a similar situation. And Apple's only been this expensive generally one other time, 2007. Apple's in a similar situation. It's slowing down in growth for the next decade. Is 6 times sales really a fair price for this company? I don't know. But I think there's a chance we see something else. So yeah, looks like we're selling off a little bit in overnight. It'll be interesting. The market will decide. It's a weighing machine. The worst case that I'm thinking of is if this is a bear market that's going to continue. That's just like a bear flag, and we're going to break down through there. So I don't know if it happens. But it looks like we're threatening support. We're on this price shelf. If investors want to take their profits and get conservative, I don't blame them. This 206 support needs to hold, and if it doesn't, then price discovery will take place, and we're going to see a different multiple. Take a screenshot of these earnings. Do yourself a favor. If you don't have Seeking Alpha, take advantage and see what happens over time. If you're a major bull, you want these numbers to go up. If you are a bull but want the price to go down so you can participate and buy it, you'll want to watch both. You want to watch price and the earnings. Okay, that's how I see it. But what do I know? I hope you found this useful. Cheers.